All right, everybody, welcome to today's pre-market forecast for Friday, January 5th, 2024. It's non-farm payrolls, a big day being released here in about 45, 50 minutes. And right now, the stock market is continuing to tank pre-market. It looks like we will probably continue to be under pressure the rest of the day. So I am expecting a hotter than forecasted jobs number, because right now the narrative that drove the market higher in December was that the Fed is going to ease starting in March. The dot plot got moved all the way up to March. Everybody thought the party started. Let's open the champagne. The Fed's going to ease. We're off to the races. Oops, not so fast. As you can see, we are taking a beating here to start 2024. And that was actually quite obvious when we looked at the yearly and the quarterly charts. We could see that we were going to be due for a pretty serious correction, and it's underway now. So be careful. And if anything, these rallies are now to be sold into. The dips are no longer to be bought. Keep that in mind. This is not financial advice. This is simply for your viewing pleasure, educational purposes, to show you what I'm seeing using Owings market analysis, which is that now is not a good time to buy the dip. It's much better to sell the rally. So when we look at the daily chart here of the E-mini S&P 500, we'll look at the NASDAQ here in a second, a couple of the other major futures markets. What we can see, and as we pointed out yesterday, is we're blowing through this low volume area on the daily chart, right? You see how we're trending down here, and really there's no substantial volume accepted price until we get down to around 4,600, 4,620 on the E-mini S&P 500 futures contract. That's about 100 points lower than we are right now, and I do think we are going to get there. You know, not today, but right now you can see the weekly chart to the left here. We're entering congestion down in a big way on big volume. That means that anybody who's long from up here at 4,780, 4,800, everybody thought the party was going to be heading into the new year from the Santa Claus rally. Now when they realize that stocks are under pressure, especially if they take a beating today after a hotter than expected non-farm payroll print, people are going to start using these rallies to get out of some of their recent long positions that they bought near the top. So that's why it's going to limit the amount that this market can rally. And then, of course, you're going to have fresh shorts piling on. The smart money is getting out up in here, and that's what we can clearly see. So on the daily today, with this trend run down, I mean, this looks very clean, very intact. You've got a lot of resistance overhead. I'm going to be looking to continue to play the short side. I will try and live stream today. I'm going to set that up and do my best. YouTube said that I needed 24 hours notice before I do my first live stream. So I set that up for 8 a.m. today. We'll see if I'm in the mood. Otherwise, for sure, we'll give it a shot on Monday. But today, I may want to focus on my own trading for non-farm payrolls. Very volatile day and lots of opportunity. All right. So with the ES here, I think we could see a pretty big drop. Depending on the number, again, we'll see. Maybe the number will come out a little bit more, friendly. Maybe it'll come out softer, and people say, oh, the rate cuts are back on the table, and that could cause this market maybe to bounce like this and, close the week up here and then have the weekly maybe suck back up to 47.40, 47.50. Either way, it doesn't matter to me. This move to the downside is underway. It looks like it's going to continue. So I'm going to use any opportunity of a big bounce to get short. Now, I'm not saying I'm going to chase at these levels. Absolutely not. That's not how I conduct my own trading. But I do have some key levels I'll be looking at on the E-mini S&P 500 futures level contract and some of the other major futures contract, where if we do bounce up into these resistance levels, 47.40 is the first one, 47.50 to 47.60. You've got a lot of resistance up there. That's what I'm going to be waiting for to try and get short. And if I do stream that live, you get to see how I do that and what I wait for during the day as I'm waiting to put on my own trades. So weakness, 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 not a time to get excited about buying the dip. That's the major takeaway for you here. Let's go to the NASDAQ. It's the same story, except it's getting torched even more over here. The Magnificent Seven are being thrown to the wayside. They're in the gutter. They're struggling. And I can only imagine that the average investor who feels that they missed out on this rally are now viewing this dip as a good time to buy. It's not a good time to buy. The volume profile is telling us it's not a good time to buy. The charts are telling us it's not a good time to buy. In fact, this is a great time for all the big money, the smart money, to unload their positions to all these willing buyers who want to scoop up this dip. I think in the end, it's going to be a sob story for the longs in 2024. That's what it's looking for right now. So with the NASDAQ, it's the same thing. It looks like this thing's just continuing to fall out of bed. We've really, if you look at the volume profile here, I mean, I covered this yesterday. I'm not going to go into too much detail again, but this is the composite of the volume profile. I mean, you can see here that all that volume there, that was an accepted price, you know, earlier in the week. And now we're just blowing straight through this low volume area. And the fact that the volume, you know, you can see it jumping out here. The fact that we're accepting lower prices, right, and the volume profile is coming out further as we head lower, that is the sign of a trend intact using volume profile analysis. And now it looks like we have the potential to just fall straight through this low volume area on the NASDAQ. So be careful. This market looks extremely weak. And again, if by some miracle this thing manages to bounce today, you know, let's say again that, you know, non-farm payrolls come out softer than expected, and it puts the narrative temporarily back on that, hey, the Fed may start easing in March because, you know, the jobs market is weak. Well, even if that happens, you know, the charts here are still intact. You're going to see, even if we manage to get a bounce up here, everybody's all excited. You know, I think heading into next week is going to be a great opportunity because we bounced on Friday. Hallelujah. No. That's going to be a great opportunity to get short and continue this party to the downside. So what is going to happen today? I can't say because much of it is dependent on the NFP number that comes out. But what I can tell you is that this looks like a bloodbath for stocks, and it's going to continue most likely, barring a miracle. I think we may have already seen the high of the year here already, because the yearly and the quarterly charts look extremely bearish. Now, might we go back up and test those highs, maybe go a little higher, suck some more longs in? Yeah, anything's possible. But, you know, basically, we're much closer, in my opinion, to what the overall high of the year will end up being than we are to the low of the year. So that means what? That means you don't want to be long up here. Again, this is just my opinion based off of my own technical analysis. Take from it what you will and make your own decisions. Let's go ahead quickly and jump on over to the treasuries. You can see here, I'll just go ahead and look at the 30-year, the ZB contract. A lot of people like that. You can see the same thing here on the daily chart for ZB. You've got the daily in a nice trend run down. What does this mean? This means rates are rising. It means that people suddenly think maybe the Fed won't ease next year because their FOMC minutes were more hawkish. You got falling bond prices, rising rates. That's putting pressure on the stock market. It's all putting together a very clear picture for us right now. So the 30-year Treasury bonds and the Ultra bonds and the 10-year are all telling the same story along with stocks. Let's go ahead and just wrap it up here with gold, silver, and crude. I don't need to cover all the markets. I will be covering all the major markets. You can see the scoreboard here. This has got all the major futures markets. I follow all these when I trade live because I'm waiting for very specific setups during the day. And those are the setups I'm going to start sharing with you in the live broadcast on YouTube once I get that all set and ready to go. But for the pre-market forecast, I just kind of tend to cover the major markets that most people like and are familiar with. So let's go ahead and move on to gold. Gold also getting torched here. It looks like a basically a complete risk off event here. You see the monthly chart on gold. I talked about that yesterday, very bearish. Weekly chart, you know, stuck in congestion. You know, daily, you're finding a little bit more support here. It doesn't look quite as bad as the stock market, to be honest, but it's certainly the rallies are being capped here in gold. I think gold's going to continue to be, you know, a mixed bag here. I'm not going to trade it unless I see something fantastic on the intraday charts. But for right now, gold is kind of a mixed bag. Silver, on the other hand, I think it's just going to continue to give great shorts. I didn't get one yesterday. I was waiting to short silver, but I was waiting up in the 2340 level. We never got there. We seem to have gotten up to this level overnight. And I mean, again, depending on the NFP number, it's all dependent on the NFP number, but based on the charts, it looks like silver is probably going to head for that weekly low here from about 3 or 4 weeks ago. And the daily looks like, it will continue to blow through all this volume, head down here. You know, probably going to break through below 23 today, again, depending on that number. So I will continue to look to get short silver. We've got a strong dollar. You know, everything's pointing here to the picture that these charts are painting, which is weak stocks, weak bonds, rising rates, falling silver, gold kind of choppy, because gold doesn't know if it wants to be a safe haven metal. Everything's risk off right now, so it's getting some inflows because people think, hey, maybe gold is a good hedge. But there's also pressure on it from the overall risk off liquidity. Remember, we got the BTFD, the Bank Term Funding Deposit Program, that has basically prevented a lot of other banks from going under in 2023. Of course, we had Silicon Valley Bank, some of these other banks, but that is coming up for expiry in March, I believe. And when that happens, this could already be the start signaling that we're going to be heading into a major liquidity crisis with the dollar strengthening, rates going higher, stocks selling off. So this is a time to be careful, or really look to trade the short side like I will. It doesn't mean that I don't take longs. For example, yesterday on the NASDAQ, there was a great long right at the open. I didn't take it. But if you're day trading, you can still, long and short, at your leisure. But I'm talking about for those of you who have portfolios and you kind of, you tend to hold your picks for a month or more. You got to be careful being long stocks up here. All right, I'm going to leave you guys with that. Take care. Good luck today. See if I can get the live stream going. And if not, then I promise we'll give it our first shot for live streaming on Monday. I'm super excited about that. Monday might be a better day to start. It's there's no major news. I can learn how to, interact with the chat and, do all that fun stuff, learn how to run the stream. I don't really want to learn how to do all that while I'm trading NFP. For me personally, there's, it's an opportunity to, hopefully make a lot of money today. So probably start the live streaming on Monday. So look for that. Take care, you guys. Good luck. And we will see you on the next broadcast. Bye-bye.